What's going on, guys? Russo Trades here. Just wanted to do a little trade breakdown, trade idea breakdown of what I see on CL, which is oil. It's just the futures form of oil. So one of my subscribers asked me to break down what I'm seeing. So as always, from what I learned from Sir Pickle and Arjo and ICT, start on the monthly. We look for monthly context to see what we see. So right here, you can see we respected this monthly fair value gap, pushed higher. We created a new monthly fair value gap right here, and then I'll label that monthly. It's a monthly fair value gap. Extend that out a little bit, and boom. So we have a monthly fair value gap, and when we come into a monthly fair value gap, we look to trade to external liquidity. So this would be external. Since we're displacing higher, we got a retracement. We're going from internal to external. So when I trade from external to internal, it's a little bit different because that's kind of against the trend, but super simple. Fair value gaps are internal range liquidity. Highs and lows are external range liquidity. So we know when we come from here, if we get displacement on the lower time frames confirming that this is going to hold, we should go to external most of the time. And higher time frame wicks like this is lower time frame displacement. Let me show you. So when I go to the daily, and I'm not sure if Sir Pickle broke this trade down, but we have been watching it for quite some time now. And now it's developing really nicely and it's gonna be super A plus. So I'm gonna show you what we see on the daily. I did skip the weekly, but we have ERL up there, obviously. Let's see what we have on the weekly. I mean, I guess you could say, we're coming off of this order block here, but I'm really just worried about that monthly fair value gap and seeing if the time frames are getting correlated. So the monthly correlates with the daily. So if I have a monthly fair value gap, I want to see a daily fair value gap be created out of that. So if you were a swing trader, you could honestly just enter right here at this daily fair value gap, target external. I'm not a swing trader, so that's not what I do. The weekly should be correlated with the 4 hour. The 4 hour should be correlated with the 15. The 1 hour should be correlated with the 5. But you can learn all this from Sir Pickle and Arjo. So here we have our monthly fair value gap. We were waiting for a displacement higher, and we did get this fair value gap right here. We got a little bit of a move here, but nothing on the lower time frame is really confirming that. But since we have one sweep here, we have another sweep here. This is perfect. Like this is so A plus. We're coming out of a monthly fair value gap. We double swept liquidity. I think the MMXM trader calls it a double purge, whatever you want to call it. And we have displacement higher. We have a fair value gap on the daily now. So we have more context confirming our bullish bias for higher prices. Um, we don't really need this when you're working with these super high time frames, but it is good to have. There's your market structure shift. I like to use it on the 15-minute, 1 hour, but on the daily, on the weekly, on the monthly, when you have fair value gaps, like that is a market structure shift on a lower time frame. So you don't necessarily need it for a lower time frame, but we have the daily here now. So really what I'm looking for here is we know we're in that monthly model, that monthly ERL to IRL. So now what I'll be waiting for is we know that I don't know why that's there. That's strange, but we know that we have daily context. So we have our daily fair value gap that we need to come and tap into, which we have not tapped into yet. Um, I'm going to delete the monthly fair value gap. Just remember that it's there. But inside of this monthly fair value gap, I've said it before already, we have this daily context. So now we can frame a trade from this daily context to this um internal to external model here, which would be with the trend. And it's literally it happens all the time. Every single asset does this. That's why I love it so much. It's the same thing every time. You scale down to more time frames. What I'll be looking for in here is either just a fair value gap in and then a fair value gap out and create that fair value gap, or I'll look for this. I'll show you. So it's either one of two things. I'm either looking for a sharp turn in, which is a fair value gap down, in and a fair value gap out. Credits to Arjo for the sharp turn model. It's basically an IFVG, not gonna lie. It's basically an inverse, but whether we get a sharp turn or a classic 2022 model, it doesn't really matter. I don't really call it all that. But right here, we would be looking for, our 1 hour fair value gap since the 1 hour aligns with the daily and the daily aligns with the monthly. So this is what I'll be looking for tomorrow or the day after, um, or Friday, because there's news the rest of the week. That's also important. You see this trade is lining up with USD red folder news, which correlates with oil. So I'll be looking for that 1 hour fair value gap to be created. That's a little market structure shift here. In this 1 hour fair value gap, since I'm an intraday scalper, I could look for inside of that, I can look for two high probability 1 minute legs, or I can look for one high probability 5 minute leg. And if you don't know what that is, go to Arjo's channel, go to Sir Pickle's channel, they're explaining for you. But I'm looking for a 5 minute leg out of this 1 hour, or I'm looking for two high probability 1 minute legs. Really just looking for fair value gaps, displacing higher. It's really all I'm looking for is swing highs, swing lows, and I'm looking for fair value gaps. So this would be super A plus. We can trade it to this daily context. Probably won't hold like a swing trade, but inside of here, since it's a market maker buy model, every PD array should hold, whether that's order blocks, breaker blocks, fair value gaps. And so based off of this daily context, we can trade, all the way up to here, whether however long that takes, a week, 2 weeks, a couple months, whatever. And then also after that, if we keep getting confirmation that we're going higher, we can trade up to this monthly context, which would be just a huge market maker buy model on the monthly. So definitely very, very interesting. What else was I going to show? I think that was all, honestly. Oh, okay. I was gonna show this is internal to external. That's best case scenario for like if you have a trade idea, because that's trading with the trend. You're trading from a fair value gap that just retraced to the swing high, which is how the market moves, and that's with the trend. But if you go from external to internal, you can do that as well, and I do that sometimes. That's when like a swing high is swept, like a previous day high, and I'm targeting a fair value gap inside. So it's just the opposite flipped, but it is against the trend, and obviously which makes it lower probability, but it still works fine. Either or, depending what I get, I just like to have daily, weekly, or monthly context. Whether that's a daily fair value gap or a daily swing high or low, or that's a weekly fair value gap or a weekly swing high or low, or a monthly fair value gap or a monthly swing high or low. So to me, it's the same thing. One is with the trend, one is against the trend, but it's like, okay, are we reacting off of this swing high on the daily? Then I'll take a trade down to internal because we just reacted off of external. Or if we're reacting off of, a weekly fair value gap, which is internal, I'll take a trade off of that weekly fair value gap to external because we're going from internal to external or external to internal. Same thing. All the markets are booked this way. Bitcoin does the same thing. All these charts do exactly the same thing. So that's the reason I actually am trading a lot more pairs on futures, and I'm also starting to look at Forex because with a lot of back testing and a lot of research, I'm just realizing, that this stuff works, and obviously it works because it's ICT concepts, but once you dig a little deeper and zoom in and do your homework, you'll realize that the way I was trading IFVGs, it was very like surface level. There was no higher time frames involved. There was no solid risk management. There was just a lot of things missing, and it didn't fit my personality. So with the way with this, it's the same thing over and over. You'll see that same setup on a whole nother pair. So it's just pretty cool, and there's no reason to make it complicated. Keep things simple. That's how you're gonna do the best. So really waiting for this, and we'll see what happens. This 1 hour looks nice. I mean, this daily looks nice. I want to see this 1 hour come lower, take out previous day low, obviously tap into here, market structure shift up or a sharp turn up. Yeah, check out Sir Pickle, check out Arjo, and yeah, I hope you enjoyed the trade idea breakdown, whatever. If Sir Pickle did this already on C Hill, I apologize, but we're all seeing the same thing. Once you learn it, you can't unlearn it, you can't unsee it. So thanks for tuning in. Thanks for the love, support. See you in the next one. God bless.